Okay, we're recording this video on Tuesday, the 18th of December, 2018. It's about 7:45 a.m. in the morning, Chicago time, 45 minutes before the open. Expecting another big day, just like yesterday. Yesterday was a big day because we dropped through the critical 2600 level. We've been playing with that for a couple of weeks and then finally got below it yesterday and just all hell broke loose on the way down. This is the 500 tip bar chart, just showing better pro-am here, and this was the open for the day, and you can see all those blue professional bars coming at the open, and they're selling it down because we break through the lows of that congestion zone and bang, we're away to the downside. But then the amateurs kind of get involved here. They're kind of trying to short it at this point, and the professionals kind of push it back up at this point here, and we rally into the 11 a.m. window. There's the 11 a.m. window there. Blue professional bars taking profits again, taking profits. That's like a last roll of the dice up there just above 2600, and then bang, they sell it down and we're off again to the downside. And this thing just keeps going and going until we get towards the end of the day. Blue professional bars picking up the lows, and then we've had a rally into the close and overnight. But anyway, so expecting some fireworks today. Again, that 2600 level's been absolutely key. So let's see what we do today. But actually just want to talk about the yen in this video on the daily chart, because that's kind of lining up for an interesting break, and let's see if we get that today. Japanese yen at JY is the continuous contract on TradeStation, just a daily chart, and this is the two sets of indicators. One is better pro-am with better momentum on one side, so I can see what the volume momentum is and where the professionals are coming in. And then on this side, this is better sine wave on all three time frames, so I can see where the major turning points are on the highest time frame and the trends that are breaking between them. Now, what's interesting on the downside here is we've had a whole bunch of support levels come in over the last couple of months. We got support on the intermediate time frame, pull back to end of trend, there it is. Support on the lowest time frame, pull back to end of trend there. We've got support on this highest time frame there with those big dots there. And we had, a couple of days ago, we had the first little break into strength. There we go, with the bars turning red, and that's the first sign. And then we come back, had a little bit of weakness, and it's just having a think about it. As soon as we break above and get above that resistance level, which is at 89.97, close above that will trigger us into an uptrend again, and that'll be kind of confirmation that we've got some time to run on the upside for the Japanese yen. Now, going to the professional and amateur kind of picture, we definitely had the professionals shorting it coming into this 97, 98 level at the beginning of the year. But we've kind of moved to the other side here. We're down at the 89s, 90 kind of level. That's key. We've had one little blue professional bar kind of come in, but you can see we've not had a real exhaustion sell signal on the downside to mirror the exhaustion buying here. So I don't think this is the end of the Japanese yen in terms of major long-term trends, but we could easily get a bounce back up into this region where we'd put in another kind of exhaustion pattern or a flush pattern. The professionals would come in more numbers up in these levels to short it again on the way down, and that's a reaction to the carry trade. And so this is what I look at with the carry trade. This is a little indicator that I've got on the site comparing the strength of the equities market with the Japanese yen. So we've got SPY and FXY. So you can plot two ETFs on the same chart in TradeStation and look at a little divergence indicator to see which is rallying and which is declining, and calculate this little momentum indicator there. On that, what you'll see is there are periods where we get strength in the Japanese yen and weakness in the equities market because the carry trade is reversing. So because the equities market or risk trades are weakening, you get kind of margin calls, and people are forced to repatriate funds to Japanese yen where they borrowed the money cheaply, and you get strength in the Japanese yen when those risk assets are kind of declining. So you get these kind of big drop-offs when this indicator starts dropping below the zero line here, and I paint those bars with white just to show those kind of big declines. So here in the last couple of weeks, we've had the Japanese yen weaken quite substantially below that zero line, and it shows that the carry trade is starting to reverse, and it means money will flow into the Japanese yen and out of risk and equities. So let us see. That's what I'm looking at on my charts. I'm looking for a break above 90 on the Japanese yen. That would be bullish for a little bit of a rally to the upside. Where it goes, we don't know, but the next place to look for is when these cyclical lines start to cross. That's the intermediate and the highest time frame. So at the moment, they're just parallel to each other. When they start to get towards 100, cross over and reverse, that's when we're looking for an area for this to kind of go the other way. But first, we need to break above that resistance there and get this thing going into an uptrend. So let us see. My feeling is we might get that break today. Looks like it it's itching to get above it. So let's check it out and see if we get a confirmation that we're in an uptrend in the Japanese yen.